Hi, we're here today at the World Wealth Creation Conference, and we're fortunate to have both Andreas Vogelsanger and David Herne representing a Vietnam fund and then a Russia fund, and then they can kind of discuss the differences and what they see as far as the growth in both those countries. Do you want to talk a bit about your fund and why you chose Vietnam?
Sure. I actually started my career in the mid-80s already in Asia, but I was actually trading Japanese convertible bonds, and I had an Asian affinity all my career, and I really once I realized the potential of Vietnam, especially when I went to visit that country, I saw the buzz, I saw the energy of how the people were trying to build businesses. I thought this is really an interesting place to go to. So my first visit to Vietnam was in '95. There was just bicycles everywhere. It was just amazing. The streets were full of bicycles and the odd motorbike. And then 5 years later, when I came back for the second time, it was actually maybe split 50-50. There were so many motorbikes already and quite a lot of bicycles. And now, if you go to Saigon or to Hanoi, you actually have difficulties crossing the street because there are enormous amount of motorbikes and many cars now, and there are roughly around 50 million motorbikes on a population of 92 million, and that number is expected to go up within a few years to around 60 million. So it's staggering, the amount of motorbikes there are. But the people are just really hardworking and entrepreneurial the way they think. They're really hungry, unlike maybe other countries like we are here sitting now in Singapore. People already reached a certain level of wealth. They are by definition less hungry, and that's maybe the attraction of these frontier markets, how they want to unlock their potential, and that offers great opportunities.
Okay, and then David, why did you pick Russia? Sorry.
Okay. It was a long time ago, right? I've been in Russia for 25 years. I have, interestingly though, what Andreas was talking about, the way you choose where to invest is based on a disparity between where values are and where they will be. In the case of Vietnam, that's because you say they're developing, right? They're very hungry, right? They're poorer than they would like to be, and then equivalent nations not so far away, and they're working very hard to improve, right? So that's where you see the dynamic. In the case of Russia, it's a little bit different. It's a disparity of understanding and evaluations, where Russia is viewed as the term second world was created for Russia, basically. There's first world, which was, the US, because the US created the term, and Western Europe. And then there was third world, which was people who did not have enough money to buy a car or vacation. And then there was second world, where the infrastructure was there. They had electricity, they had water, Russia, as you probably know, has better literacy than the US, lower infant mortality than the US. It's in many cases better standards than the US, but it's second world because it's not the US, and the valuations have always been lower. And there are some legitimate reasons for that. So I'm getting around to answering the question, why Russia? The reason to invest in Russia is because the view of Russia is very different than the reality. The view of Russia is that it is somehow dangerous, it is somehow you're going to get your money stolen. And the reality is, it may happen anywhere, but it's not any more likely to happen in Russia than in France, for example.
It's actually interesting what you're saying about the education, and that's always. Everybody knows about Russia, about how well they play chess, to Kasparov and people like them. So, by definition, people think very highly about the level of education in Russia, and I think that's a very important ingredient for the long-term growth or prosperity of a country. But if I look at Vietnam, it's a very similar picture. There is a study done by OECD called PISA study. So what they do, they look at the 15-year-olds around the world, the education level in reading, science and mathematics, and Vietnam has a staggering overall performance in that study. So given that they are still a very poor nation, so the GDP per capita is only $2,100, but they are on the same level like industrialized nation, like Switzerland, like Germany, in terms of education level, and that's now
they're at the level of Switzerland.
Level of Switzerland, yes. So and that's not just a one-off. That's now a few studies, one after the other. Every 4 years, a new study comes
again,
out.
To put it in context, much better than the U.S.
Much better than the U.S.
Which is fantastic, right?
Of course, the U.S. has the Ivy Leagues, you know that very well, but which have an outstanding education, but the average, unfortunately, in the US obviously is not that impressive. But yeah, Vietnam actually is ranking very, very favorably. But actually, if you look at this PISA study, what strikes you most is that Asian countries are all coming up in the top 10. You have obviously Singapore, Hong Kong, Japan, which are having outstanding performances. So we could clearly see. I mean, it's Asia is on the move, and that's where probably some growth opportunities are happening. That's the reason why, as well, 11 years ago I decided to move to Asia, because the opportunities are just very exciting, and I don't regret that decision at all.
Do either one of you want to share your returns on your funds, or perhaps or performance, and or stats on the actual countries? If you want to provide like GDP growth over the last 5 to 10 years or so.
Sure. I think we just had a discussion. David just mentioned his historic performance is not necessarily what he thinks are that important. Nevertheless, in my marketing activities, it always comes up, that question. How were you performing? Even, of course, historic performance are not a guarantee for future performance. And you see that in every disclaimer, in every presentation. If it's not there, probably the regulators will right away step in and say, this is not on, you have to write that in, you have to make that clear to the public. There's no guarantee. But so far, I think Vietnam is just at the very beginning of the journey. The economy is growing fast, and the market has actually not done that much since we started the fund, but we are outperforming nicely. We're up now 80%. But I really think, maybe a little bit to David's point, it's not that relevant yet. I think the real music only starts playing once Vietnam gets reclassified from a frontier market to an emerging market, because then we estimate there are roughly $3 trillion in emerging market funds, and conservatively they should be allocating roughly 0.5% to Vietnam. That means $15 billion. And $15 billion on the market cap, what we currently have of around 120 billion, that's quite a lot of money. Plus you have all the hot money coming in. So that will definitely impact the market very, very favorably, and we expect the market going up, just driven by liquidity, which is chasing after the stocks. But so future performances are, of course, everybody which is investing now wants to know what is the potential. Very difficult again to say, but I think with the ingredients are right that it could work out quite nicely, given that the economy is growing, the market is actually not that expensive. We have in our fund a P of around 10 and a dividend yield of over 7%. So you don't buy something which is extremely expensive. You buy something which has a lot of potential at inexpensive valuations, and that, in my view, makes it quite easy to make an investment decision there.
Okay. I've actually forgotten the question now. It was about historical returns, right? Yeah. So we had obviously we had some very good years. We wound up we were the best performing fund in the world for a few years. We wound up making about 600% in well, it was a core period of about 3 years, and over the life of the first of our funds, it was 800% cash on cash we returned to investors. I don't, as Andreas was saying, I don't actually think that's relevant. I love to talk about it. I'd love to brag about it. But if you're a smart investor and you're looking at where to invest, if anything, historical very strong returns should be a worrisome thing because there is some cyclicality to markets. So you want to be careful about that and look at where things are going from now, right? And from now, Russia's come down a lot, right? So our strong returns were up until 2011. Since then, the market's been down to stable, right? Depending on the year. Now, finally, it looks like it's coming back up, right? So my view on the Russian market is that over the next 2 years, we're going to double, right? It might happen in 1 year, it might happen in 6 months, it might happen in 2 years, I don't know, but we will be worth twice what we are today in about 2 years, and that's good enough, right? I mean, that's not a bad return.
David, may I ask you, my perception, maybe that's wrong. I always thought Russia is very much driven by the oil price. How much driven by the oil price is it today? Is it still that dependent?
That's obviously a fantastic question because very much we have that image. Everyone does. Everyone who invests has that image. And even the analysts who are locally based, when we've done analysis, statistical analysis, looking at the oil price and the Russian index, over the long term, it's not correlated. So the level, okay, let me put this different. The level of the oil price is not at all correlated with the level of the Russian market. However, movements, sharp movements in the oil price are correlated. So if the oil price tanks, if it crashes, the Russian market will react. It will go down. If the oil price goes up sharply, the Russian market will go up, right? So movements are correlated. However, the actual level doesn't matter. So if the oil price goes from 40 to 80, the Russian market will do extremely well. If the oil price goes from 120 to 80, the Russian market will do terribly, right? So it's, in answer to your question, the oil price does matter. What matters is the movements, not the actual level, right, that we've been able to identify.
Thank you very much.
Okay,
It
thank
was
you
really
for your
interesting.
time. Thank you for both of your time. Thank you.